Over the last year and a half, Intel has underperformed the other chip manufacturers by a great degree. In this video, I'm hoping to take a closer look at Intel versus Nvidia versus AMD, look at the financial comparisons and see if there's any opportunity specifically for Intel. In today's video, I'm going to go over my price target for Intel. We're going to look at the financials compared to Nvidia and AMD. We're going to look at the Q3 results for Intel, and I'm going to give my final thoughts on Intel as an investment. Hi everybody, my name is Frank and welcome to Frank Finance. I do videos on personal finance, investing, and stock analysis, so if you like this type of content, please consider subscribing. And without further ado, back to your content. Now my price target for Intel is about $60 a share. Right now they're currently trading for about $50 a share, so the upside's about 20%. On the downside, I think they could drop back into the $45 range if there's more bad news or chip shortage delays. We could see that downside actually get a little bit greater, but right now I think the downside is about 10%, around the $45 range. All right, jumping into the financials. For the last 12 months, Intel's had revenue of $78.47, net income in the last 12 months at $21.1 billion, AMD at $14.85 billion, and net income near $4 billion. Nvidia had $24 billion in revenue and net income of $8.2 billion. And Taiwan Semiconductors I threw in as a bonus at $54.25 billion in revenue and net income of $20.58. Now, if we're looking at converting revenue into net income, best in class actually on here is Taiwan Semiconductors. Their conversion is this divided by this is about 2.6, lower number being better. And Intel's around 3.7. So basically 3.7 times 21.1 will give you 78. And so in terms of conversion, about Intel and AMD are about right around the same, and around that 3.7 range. Nvidia is getting actually sub 3, so they're about 2.9 something, and Taiwan Semiconductors at like 2.6 or so. So Taiwan Semiconductors is doing a really good job of turning revenue into net income, getting it to the bottom line. Nvidia is second in the list, and AMD and Intel are basically tied for third. Looking at market cap on here, we have market cap of almost $200 billion for Intel, AMD at 173. You can see the difference in their revenue and net income and having a very, very close valuation. Looking at Nvidia, we can see that they're largest on this list, coming in at number one in terms of valuation at $767 billion. And Taiwan Semiconductors coming in second at $564.76 billion. If you look at the price to earnings, so it's basically this earnings here to their price, and so it's 9.56 for Intel. AMD is going to be higher at 44.58. Nvidia is going to have the highest PE of almost nearly 100 here, and Taiwan Semiconductors around 30. Now you can tell. The reason why these P&Es for AMD and Nvidia are higher is you're going to want to see larger growth. So let's move on to growth for the last 3 years. We're going to want to look at that to see what's going on there. Now, Intel's had growth of just about 13, 1%, and 8% in the last 3 years. So not an extremely high growth rate. I probably expect growth probably in the 5% or less in coming years. While the chip market is still growing, they are losing market share, so we expect them to either be about the same or have a lower single-digit growth. We don't expect what we're seeing with AMD and Nvidia right now. Now moving on to AMD and Nvidia, you see AMD at 23.26, 3.95, 45.05 in their growth rates for the last 3 years. So really solid growth numbers. It looks like the chip market for full year 2019 really saw a hit. Unsure exactly why that is, but pretty much all the chip manufacturers saw really low growth that year. So that doesn't seem to be an issue. Nvidia, we saw them growing at 20%, negative 6%, and then 52.7% in the last 3 years. So some of the higher growth, one of the highest growth rates in a single year was in 2020 for Nvidia. And Taiwan Semiconductors growing at relatively low growth, but remaining high. No, this isn't one of the lowest numbers and isn't one of the highest numbers, but considering for their size, growing at 25% in 2020, that's pretty good. They have $54 billion in revenue currently. So the larger these companies get, the harder it is for them to grow. But I believe Taiwan Semiconductor is mainly outsourcing and producing the chips, so they are to actually, as more people go through them to manufacture their chips, they probably are able to grow a little bit faster since they have a whole lot of manufacturing capacity. That's one consideration there for those guys. So on the growth side here, we got AMD and Nvidia considerably growing faster than Intel. Like I said before, the chip industry is growing as a whole, so we could see a little bit of market share deterioration, but still see growth for Intel into the future. Actually, we expect growth for all these names. Looking at AMD versus Nvidia, really you're looking at pricing here. Okay, so we're seeing Nvidia has one of the best conversion rates. They also have one of the highest valuations, but does it warrant a almost doubling from AMD and a 10 times the current valuation of, not current valuation, but the PE being 10 times higher than Intel? I'm not quite sure if I'm on board with that. Level of growth is quite high, or that level of valuation is quite high to the growth levels. If it continued at 50% clip or a 30-40% clip, then I think there's some argument there to be had. But right now, I'm a little skeptical with this. And also the other thing to note between the AMD valuation and the Nvidia valuation is share growth out in the last 5 years. So in the last 5 years, you've seen 51% increase in shares outstanding for AMD versus Nvidia keeping shares flat. The one good thing for Intel on here is that they have been reducing their shares outstanding over the last 5 years, and they've decreased that by about 16.2%. So overall, these are the numbers for Intel versus AMD versus Nvidia, and as a bonus, Taiwan Semiconductors. Intel reported their Q3 results on October 21st, 2021. Analysts had their earnings per share coming in at $1.06. Intel was able to beat that by 61 cents and reported $1.67 earnings per share, or close to a 50% beat. On the revenue side, Intel reported $18.09 billion in revenue compared to analyst estimates of $18.28. That calculates out to a miss of $186.52 million, so pretty small miss in comparison to their total revenue versus analyst estimates there. So overall, it looks like Intel had a very good quarter. That earnings per share beat by about 50% is quite nice. All right, for my final thoughts on Intel, I believe they can get to $60 a share in the next 12 months. They're currently trading around $50 a share, so that's about a 20% upside. I believe the downside risk is about 10% or $45 a share. So right now, I don't know if there's a really great risk reward for them. I know that Intel looks financially solid comparing them to their peers. All the indicators, the high-level indicators, they look very solid when you compare them to their peers. They have a very modest PE for a chip manufacturer. They have really good net income. They actually have a dividend. I don't believe the others do. They have fairly low, single-digit growth rates, which aren't great, but they still are growing. I believe into the future, their market share over the last 5 years has been solid. They haven't really lost or gained any market share. And as the chip industry continues to grow, even if they maintain their market share where it currently is, they'll still be able to see growth, even if it's in the low single digits, which is where I'm kind of estimating they'll be over the next 5 years. Now, in Q3, part of their earnings report, they had a slight dip in one of their chip sales of about 2%. I believe it was their computer CPUs or something like along that line. And this is a large percentage of where their revenue comes from. And I don't believe that large dip, the price movement in their stock was in a comparison to an actual dip in those sales. So a 2% dip, and we saw probably about a 10% drop in their shares price. I don't think that was warranted. I believe there was probably something actually to do with the chip shortage. And there was some guidance to that specific point by the CEO saying that in future quarters we should see that start to shore up and things will start to get better as the chip shortage starts to get sorted out. Now, I believe as we went through the financials, Intc, Intel looks like a very good value when you compare it to its peers. in terms of its price performance, it hasn't performed nearly as well over the last even 1 year or 5 years when you compare it to Nvidia or Nvidia or AMD. So I believe there is some short-term, I believe the short-term risk reward here is not super attractive right now, as I think I mentioned earlier, but I'll be more interested if it gets kind of down to that low side of around $45 or $46 a share. At that point, the upside's a little bit higher, and I think there's more limited downside risk, especially if you're looking at more of a short-term investment. If you're looking more long-term, the financials look great, and everything doesn't look like the financials are heading in the right directions, essentially. And the sentiment is negative today, but I believe as a 5-year play, Intel could be a very good investment for the right person, right? You're also if you are looking for growth with a little bit of dividend, they also offer that as well versus some of the other chip manufacturers. Now, for me personally, right now, the risk reward is not there, so I'm not going to be making a move on Intel. But if they drop down to the $45 range, I may pull the trigger on that. If you like this type of content, please consider subscribing. I do videos on personal finance, investing, and stock analysis. Please hit that like button. My name is Frank Finance. Out.